right, good morning, ladies and gentlemen, and to those of you watching the stream on replay. Today is February 10th, 2021, and I am back with another edition of the Wednesday show. And we're going to take a look at the open trades that we have, and there's actually quite a few. But real quick, before we do that, let's take a look at this crazy market. Starting with the Russell 2000. Look at this parabolic move. Wow, this is something, isn't it? Man, I'll tell you what. Last night I was looking through a whole bunch of charts, and I gotta tell you, it's absolutely incredible some of the percentage moves that these individual stocks are making, and just the market in general. All these up days, but the Russell 2000 is really something to behold because whoop, I messed up my trend line. I shouldn't even have touched it. I had it kind of across these recent, there you go. These recent lows and this is the breakout here, right? Like that line goes back to the high in 2018, and so the Russell has been kind of the laggard and took a long time to finally, I guess we can probably see that on the weekly chart. Yeah, there you go. So there's the, 2018, there was the all-time high in the Russell, and it came close to it at the beginning of 2020, and but this move off of the lows, like the last, I guess it was what, last March? Yeah, March's lows there. There's the pandemic sell-off in the Russell. It's pretty brutal actually, but this particular the rebound from that and the follow through is extraordinary. And you can see the way that it's pulling away from this sort of trend line and kind of going parabolic there. I mean, look at all these up days in a row. So the S&P's, kind of similar, but doesn't quite look so outrageous. There's a couple of days where you had lower closes than opens, but regardless, I've been saying that sort of the trajectory of this increase is kind of uncanny. Not really. I mean, we've seen it before plenty of times. We've seen the market just sort of rip higher in a short amount of time. But so it's been sort of slow and steady and relatively uneventful, other than the fact that every morning I come into my office and flick on the TV and there's the futures up again. you know, quarter percent, half percent, 1%. It's just it's amazing. It's been sort of, I guess you could sort of characterize this as a bit of a melt up. So individual stocks are a whole different story. I mean, over the past couple of months, it's been the EV stocks, electric vehicle stocks, and so recently it's been, look at this, the marijuana stocks, right? This is a cannabis ETF. Just incredible. These things have just gone parabolic. Um, and I mean, look at this thing. I've been Tilray, right? I mean, this is a pot stock, and boy, look at that. I mean, just crazy sorts of moves. And so, we're seeing the similar phenomenon to like what happened in GameStop, I guess. I don't know. It's just amazing that the themes to these things, there's like certain sectors, and of course, everything's just about everything is doing really well, but some of the uh, some of the sectors, right, seem to really, and I've said for years, a lot of you guys heard me say that the market's kind of is mostly a popularity contest, where stocks and sectors come and go from favor. And so now it seems like there's a whole, well, we know that there is a whole ton of like hot speculative money just basically looking for, whatever's going up to buy. And so, has the market become disconnected from the fundamentals? Yeah, certain parts of it. I mean, this is just just amazing. Let's see, there's another one that I have on my watch list, ACB. Not quite as dramatic there, but still just absolutely amazing. So anyway, let's take a look at the NASDAQ 100. Kind of slow and steady, pulling away from, the prime, wherever you want to draw this primary trend line. I could draw it between those lows. You can move it up a little bit. Regardless, obviously, we keep hitting a series of new highs, so there's no overhead resistance, right? Which is, and of course, the more people that see the market going up and read the stories about it, and regular people um, getting involved, and so it kind of reminds me of the late '90s in a way. Actually, a lot of what's going on reminds me of the late '90s, but it can go on for longer than anyone can imagine, and it's not the first time that we've seen, but it seems like speculation in the stock market is starting to reach sort of a fever pitch, and I mean we haven't really seen anything that constitutes any sort of a real sort of dip or pullback since last year. I don't know that this would even qualify. I suppose this was just a little bit of a shakeout here, but in the big scheme of things, was a few percent or something. So I guess you'd call it a dip. But anyway, regardless of all that, um, our system obviously is interested in individual stocks and is using the chart patterns of individual stocks to basically wait for stocks to have some sort of a pullback, stocks in a primary near-term uptrend, and then when they have a pullback, some of them make the cut as far as setting up for a swing trade, and typically they hit the pending list and they stay on there for a while, and then as the pullback runs its course and the change in trend happens, then we want to jump on board and catch the next cycle up, right? And so here you go. And you'll notice, like, down at the bottom here, there's some trades that have been open for quite some time. Um, and then there's a few new ones. We had a bunch of them trigger in last week, with the market, obviously continuing to go up. But as we look at these charts, you'll notice obviously that each one had its own little pullback. And so let's dive right into it here. I'll start at the top here with the DocuSign. This is actually kind of a sweet pattern, really. You can sort of see the symmetry between this current rally and this one back here, and even this one, right? So stock has a habit of moving higher, taking a dip, rallying back up, and it's kind of, what's interesting about this is that this wasn't. I suppose you could call this a pivot low, but it wasn't really that clean. It was basically sort of, the stock had a big long range day down, sold off for a few days, chopped around, and then just reverse course and ripped higher. This current little rally that we're seeing here, is a little bit. The bottom of it looks like this, but the right side of it, like where we sort of jumped in here, looks a little bit more like this one back here in December. So anyway, regardless of that, the fill on this was a little funky because trigger price was 240, right? And so this particular day it closed at 239.84, right? And so basically, it would have triggered here had it just closed a few cents higher, but the system has a set of rules, and we're looking at the closing price, all right? We're using the closing price, and so the official trigger here was was way up here, and so as you guys know, basically all that means is that is that you want to see as of today we're hitting like the official target, which is 240 to 260, 20 bucks above the actual trigger price. But since in reality the official entry would have been up here, then we just compensate for that by shooting for a little bit higher target, and then you end up with basically the same from the distance from the trigger to the entry to the target to the compensation target, just a little bit higher. So anyway, looking pretty good considering that that this one just triggered in. Today's only basically the fourth day, and so far so good. And of course you can choose. As of yesterday's close, this was up 6%. It's up another close to a couple of percent this morning, so not bad. Um, Moving down the list here, same sort of thing. Dollar Tree. Aside from this big gap up, which this may have been on earnings, kind of looks like an earnings pop, so I don't necessarily always like go look at every single one and see what the so I didn't bother to check this, but that looks like an earnings pop. Anyway, this was actually this is kind of like what I like to see is a nice well, orderly sell down, relatively orderly, I should say. So the more orderly the sell off, the better. But the nice thing about this one is, as opposed to, occasionally some others, is I like to see a sell off that happens over, a few weeks, maybe even a month's period of time, as opposed to like some crazy, 2 or 3 day sell off and then bottoms out and turns right around. So it seems like the more orderly and sort of a medium duration sell off tends to, there we go, I finally got that trend line right. That tends to, give a little extra gravity to the turnaround and the change in trend, right? And the other thing about this is that you'll notice on some of the swing trades that, and this depends a lot on how deep the pullback goes. Sometimes the target is above the previous high, and sometimes it's like this one is basically it's just got to rally back to sort of 3/4 of the way back up to where it was, maybe a little bit more. But so far so good on this one. You can see the trailing stop started off down here around the lows of the pattern. Get that trend line break and so the entry or the trigger, I should say, trigger was 106 right here. So it looks like maybe ideally, you had a trend line break here, so ideally the next day, a little bit lower, but the thing of it is you guys that have been around for a while know that, you don't really sweat the nickels and dimes on this because when they work, they tend to work really well. And over the course of time, everything sort of evens out. So it's no huge big deal, quite honestly. No huge big deal that maybe we got triggered in just a little bit higher than what would have been like a perfect trend line break pattern, but system knows what it's doing, and so you can see that there was a little bit of a gap up here, and so far, so good. It's approaching the actual target. I didn't put the compensation target on here, but it would be just slightly higher. And again, this one's only been open for today's the fourth day, so looking pretty good here. I'm a little concerned about what the overall market might do, just because it seems like the market needs to shake out. So it needs a little bit of a shakeout, a little bit of a wake up call. So. But this one, ExxonMobil, is interesting because typically, um, energy's been out of favor for a while, but back at the end of the year, you started to see, I guess value investors and, the price of oil's been going up quite a bit. Price of gasoline's been going up. I think oil was about 60 bucks the other day, yesterday or whatever. Um, and so anyway, ExxonMobil obviously has been getting some sort of stealth buying. You don't hear a lot about it, and And I don't know. Doesn't look like it's made the list in a long time, since like maybe last year or whatever. But anyway, since November, it's had a pretty nice little rally, and then finally there was enough of a dip to put it on the list here for a swing trade. But the funny thing is that, ExxonMobil typically doesn't have extreme volatility, or much volatility. Moves on average probably a couple of percent a day. But look at this, trend line break, triggered in, turned right around, and just over the past couple of weeks really made sort of an uncharacteristic type move. Although, looking at this chart here, all of a sudden it's trading a little bit sort of uncharacteristically. And I'll bet you this thing. Well, hang on, I'll look it up. I'm just curious about the dividend on ExxonMobil here. I haven't looked at that in a while, and I know there's, with interest rates basically at zero and all that, there's quite a few stocks that. So the dividend on this, according to FinViz, is 6.87%, which is, and that's based on, the move that it made, this move that's already made. So, down here, I think I remember when ExxonMobil had, close to 9 or 10% dividend. I may be confusing it with something else, but yeah, there's still some big dividends out there, and so in an era of extremely low interest rates, and obviously, the Fed saying that they're going to hold interest rates low for the foreseeable future, meaning, theoretically, the next couple of years, um, you get sort of bang for your buck. Now, of course, we're swing trading this, and so, but that doesn't necessarily mean that you can't take a swing trade and then cash out a partial position, maybe hold on to a little bit, who knows. But of course the system's going to do what the system does, and we're just trading in and out of individual ticker symbols, and so eventually this will close. But anyway, long story short, you can see that this trailing stop has moved all the way up here, and so far so good. I didn't put the comp. I don't normally draw the compensation targets on all these. You guys can figure that out yourself. You only got to figure it out once, and then you basically, so the fill on this was a little bit over the trigger price, um, the official fill, and here you can see that over the past few days that it's more than cleared that as far as the target goes. So there was the target, and so looking pretty good. And of course, the target's based on the actual volatility of the individual stock as calculated over a month's period of time. So based on the ATR. And so that's why you'll see like one of these stocks. I think it might be this next one. Is it this one? Yeah. Um, it's either this one or one of the ones we're about to look at. But when I first saw what the target was, I was like, whoa, look at where that target is. And I don't remember if it was this one or not, but anyhow, um, MASI, right? This is really kind of a nice looking pattern here, which doesn't necessarily mean that this one's definitely going to the target, as opposed to one that the pattern doesn't look as good. But what you see here is kind of an inverse head and shoulders, perfect pivot low, and so this is kind of the left shoulder, and this is kind of the right shoulder, and basically there's kind of, you can see like sort of a, I don't want to mess up my chart here, but you can see that it's trying to clear like a big sort of point of resistance here. So, and I mean, it triggered in a little bit lower here. It was the resistance, quite frankly, there's a band of resistance that goes all the way from probably about 265 to about, what I'm looking at is like this high and these highs right here. So that's sort of, if I change that to a different color, maybe it might make more more sense. So this is kind of, technically speaking, kind of an inverse head and shoulders looking pattern. This is the zone of resistance, and it's attempting to sort of clear that to the upside, in which case, if you looked at like a volume profile chart of this area here, there's probably, like, whatever this particular sell-off was, typically there's volume gaps on something like this. And so if it can get sucked up into that volume gap, then it has a good chance of rallying back to these prior highs. So we'll just have to see, but not looking too bad here. Nothing too exciting on this particular one, but the chart pattern's kind of encouraging. Look at this, how it's sold down. This is what I was talking about earlier. If something sells off like this and just reverses in a few days, those aren't necessary. Obviously, you see a sell-off like that, and then you'd be kind of reluctant to jump right back in, assuming that it's just going to rally right back up. So, but a sell-off like this that sort of runs its course over some time, and then you get that change in trend is a little bit better of a pattern. So let's move on here. IOVA. But we see a lot of these like sort of V bottom type of moves in the market. And so the funny thing is, not really funny, but the thing I've noticed is that there's plenty of individual stocks that have their little individual sell-offs, even when the market didn't sell down here. Basically, stocks they go through cycles, and so here was a little sort of sell-off cycle. And then this was actually kind of a nice little bottoming pattern. You had, you had an inside day, and then this one wasn't quite an inside day, but close. And then you had another like narrow range inside day there, and then it popped, right? And so this is the one. Whoop, I didn't draw the compensation target. Here's another one that it tagged the actual target, but it needs to go up a little bit more to compensate for this gap. Not a big deal though. Stops coming up, and so it was looking pretty good here, quite honestly. Obviously, it's fairly significantly above the entry. The market's, as we're speaking here, the market's like really sort of tanking, and I haven't looked at the news to see what it's all about, but we've had like these big overnight moves, and and so like the market gaps up every day, and then this morning at like 8:30 the CPI numbers came out, and the market popped again like 10 points in 5 minutes. And so at some point, at some point, like I said, the market needs to kind of just shake out a little bit, and um, shake out some of the speculation, which is not necessarily going to mean just like one down session. So I think things are getting a little bit out of hand. So, but anyway, I just watched the S&P here. Basically lost about 30 points almost since the open here, and so maybe we'll see a little bit of a shakeout here going forward. And the funny thing is that prior to the show this morning, I start the show 30 minutes after the open. Prior to that, I was looking at the like all these open trades here. Every single one of them was green, and then they slowly started turning red. And wow, they're really selling this thing off. So yeah, it's gonna get interesting from here. And so obviously, what our system does, you guys know this, is that it's all about that trailing stop, right? Like we get into one of these swing trades, and then it sets an initial stop, and then very quickly the trailing stop comes up, and so that way when we do run into an actual market sell-off that takes everything down, um, theoretically, hopefully, we're not taking a full stop out. So I always get worried when we get a bunch of new stocks that all trigger in at once, and that always makes me wonder, geez, if all of a sudden the market has a big sell-off, then that's gonna be kind of rough. But anyway, regardless of all that, here's another one. This was kind of a quick sell-off, pivot low. Talked about this last week, and just sort of turned around. It seems to be struggling a little bit up here. Um, a little bit up here, like with this. This would be the big area of resistance on this particular stock. And sometimes they're able to just rally right back up, fairly quickly, and other times they struggle at what would seem like an obvious area of resistance. And so this one's kind of been moving sideways a little bit, and of course it was green earlier, but now it's going red because of the overall market. So far so good though. There's fairly decent little move. It's like, it's made it about halfway to the target. There was hardly any of a gap here. Uh, Trailing stops come up, so looking so good. A couple of these other ones, Square. This is what you want to see here. And I remember when we looked at this originally, I can't remember if we looked at it when it was on the pending or when it first triggered in, but this was one that I mentioned. Not that my opinion actually, has a whole lot of value as far as like which ones I think, out of the stocks, because obviously, it's we recommend that you sort of pick and choose amongst the ones that are triggering in. And so, some of that's preference as far as the volatility, right? Like if you're more conservative, the ExxonMobil may appeal to you as opposed to, and if you're more of a, what's the opposite of conservative? Something like this Square that has a lot of volatility, but it can move really fast. This may appeal. Anyway, this was a nice pattern, right? Which you can see I drew on the chart. And so everything about this looked good. And you can see that, once it sort of broke out of this little falling wedge triangle pattern or whatever, it's just ripped higher, right? And so there you go. And so, poking through the target here. And so the idea obviously is that you want to take profits at the target. That's why it's there. And so that reduces your risk. I mean, in certain cases you could just choose to just shoot for the target and take it all off, or what we normally recommend, like in the documentation, is that you take half off of the target and let the other half ride with the trailing stop. And when we get to the final one, we'll see why. Because that's, occasionally, like one out of every, 6 or 8 or 10, even, 1 out of 6 or 8 or 10 of your swing trades is going to blow through the target and just keep going. And, so that's probably where the edge really comes in. There's quite a few edges built into this system. The main edge is the scaling of the trailing stop. And so, a lot of people, they use stops, they use trailing stops, but this is a logical methodology that's all programmed into a system that basically uses age-old things that have been proven to work in the market. And one is, you know, obviously setting an initial stop. And if for some reason, we get pulled into one and it just, there's the change in trend fails, like there's a trend failure, then we get stopped out with, a small, reasonable stop. We take full stops, but the ones that, blast through the targets and keep going, um, the system will stick with that. So that's sort of the beauty of it. So the only way that one of the positions gets closed is when it hits the trailing stop, right? And so the trailing stop is calculated to keep us in a move and still allow for normal price volatility, which is which is tricky. It's sort of a double-edged sword, right? Like you could look at this and say, well, the stop should be up here. But see, here's the funny thing. If you look at square, right, you'll notice that we've kind of compensated for that by putting in what we call a parabolic stop, right? This is a discretionary sort of thing, right? Because everybody's a little bit different, and so if you look at this chart and the first thing that comes to mind is like, oh, why would I, give up with the price up here? Why would I possibly ever let it come back down to here? When I'd rather have a tighter stop. So, anyways, that's where the P stop comes in. The parabolic stop is at 250 even, and as you guys know, the parabolic stop kicks in, when a stock has sort of made a parabolic move, and basically that's going to, protect most of the gains, right? So, on it looks like the market's in for a little, rough session here, but if this thing happened to just like keep ripping higher, this parabolic stop will continue to move up and typically be under the low of the previous day. And that's for, people that want to lock it in real quick. Others may say, well, this is a great stock. It's breaking out. There's no reason to be too tight with the stop. And so basically, the trailing stop, as I mentioned, is designed and intended to be able to ride out like, little bouts of volatility and small pullbacks and still keep us in the trade, assuming that, it's got potential to still go much higher. So anyway, that's that. And so far, so good on Square. Once the trailing stop makes it above the trigger, then basically, all is well. So that's actually kind of that's part of one of the goals of the system is to get that trailing stop, up as close to break even as possible, as quickly as possible, obviously, while still taking into consideration, what the price is doing. So everything's based on, price and time. And so anyway, this one's looking really, really good, and um, pretty significant move actually as of the close yesterday. Well, let's see, Square's down, less than 1% right now today, but as of yesterday, it was up 13.7%, so still looking pretty good. Here's another sort of what I would typically call a boring stock, Nike. It's not really a boring stock. It's just that the ranges, like the average daily range on this is relatively low. A couple of percent roughly. And so, this is, it's kind of like ExxonMobil. It's one of those big, thick, stalwart, Dow stocks that, don't necessarily get the sort of action that you get in something like a Square, but it still goes through cycles, and you can see here, you can see that dip, and this turned out to be like a little pivot low right here. Pivot lows, you can't really identify a pivot low until you got at least a couple of bars on the right side of it. So not really, this is not really a good stock necessarily to draw a trend line on, but I suppose if I was going to draw like a trend line, I'd draw it across these couple of highs here. So it took a pretty good dip down there, but the other thing was it also had a pretty decent rally off the lows before it triggered in, and the funny thing is, see, the trigger price was way down here, right? It would have been, obviously the system, and I don't know, you don't, I don't, nobody has any control over what an individual stock's going to do on any particular day, and we see lots of gaps and lots of crazy moves, and and you can see a couple of them on the chart, but that's what happened here basically. In theory, like according to our calculations, right? This little consolidation area down here, all we were looking for was like, a close above 136.50, which would have been an ideal spot to jump in. That was, prior to the trend line break. But this particular day, the day that, it gapped over the trigger and had a big move up. And so you can see here that I put the compensation target up here at 148.50, and that basically compensates for the gap up. So um, nice thing is that the trailing stop has moved all the way up to basically, you know, above the trigger, but it's not quite up to like where the actual entry would have occurred. So so we'll see what happens with that. But anyway, so far so good, although, depending on what the market does. Now here's the last one and the most interesting one. I'm gonna make this a short show today. Is this Lakeland Industries, right? So as of yesterday's close, this thing was up 55% from from the trigger, right? And of course, same thing here. There was a little bit of a gap up, but I mean, if there was ever a parabolic move, this was it. Consequently, the parabolic stop on this one, the P stop, which is right here, 43.50, which was actually, that's kind of unusual, but 43.50. So it was inside of yesterday's. Whoops. What I meant to do is put that over here because oh, this chart is not going to cooperate. Well, anyway, you get the point. So this was this was the P stop, and I mean that stock just went crazy. And so this is you see these kind of moves. I'll just put that on here just so I have it. 43.50. You see these kind of parabolic moves, and see, here's the funny thing. If you go back on this chart here, this was actually, when we talked about this originally, this was one of the really nicer sort of sell-offs. I mean, I see a sell-off that looks like this. It's got sort of the rounding bottom. It's got kind of the sideways days and all that. And so everything about this just looked great. Um, it was just a beautiful sort of pullback pattern right there. And so there you go. And so anyway, I mean, it started taking off. Shortly after triggering in, it started taking off, but the move right here just went, absolutely parabolic. And so this is what happens, right? I mean, this is basically like what you're going to see in a bunch of these stocks that absolutely went parabolic, and there's lots of them out there, right? I mean, well, hang on, let's look at GME. This is a little bit different of a case, but you've all heard of the Eiffel Tower pattern. Well, that's typically what happens when a stock goes parabolic. But, you look at it, they can always go higher too. But eventually they sort of end like this. And so consequently, long story short, as of last night, this trailing stop ratcheted all the way up to $40, and so this is going to be a closed position today. This will get closed tonight when Jeffrey runs the update, and you can see, the funny thing is that I guess when the trailing stop moved up to the low of Monday, I thought to myself, well, that's kind of weird, because typically the trailing stop hangs back a little bit further, but the system, and I know this by hearing Jeffrey explain it to me, is that the system, if a stock really starts to make a big move, that trailing stop tightens up considerably, as opposed to, when it's sort of hanging back, allowing for a normal pullback. And that's just a function of what's built into the system. So anyway, long story short, you're always, I don't say always, but most times, you're going to give some back. I mean, obviously, we're really not gonna get out at the highs, and that's because it's impossible to figure out where the highs are. So you got to draw the line somewhere. So what I wanted to do was I wanted to pull that sort of back because this is really how it should look, I mean, a lot of times I draw these things on here and I just drag them out, but that gives a little bit better sort of indication of how it works. And so the interesting thing to notice here is that just the regular old trailing stop essentially um, went, and we don't see this very often. I mean, typically the trailing stop on most of the swing trades is going to be below, the low of one of the prior sessions, right? Kind of like it was here, and that's even, a lot of times it's below the low a couple of days back or somewhere, but this was sort of unusual that the trailing stop, as of today, moved all the way up to the mid range of this particular price bar from Monday, and that just means that the stock was overextended. I say overextended because I mean they can continue to get overextended, but just absolute. This is the kind of madness we're seeing in this market, and this is what you're going to see on a lot of stocks. Someday, maybe today. I haven't looked around at a bunch of other stuff, but you're going to see a lot of this because there's so many stocks have gone just off the rails, parabolic, and so consequently, if you're holding any of those other stocks, uh, if you're holding any of those other stocks, it's not a bad idea to you know set set stops and protect some profits, really. So, I looked at this earlier. I'm glancing at this. So this thing's it's up basically it's up 20% from yesterday's close and down 20% from today's open. Right? And so that's sort of indicative of kind of a crazy market when you see moves like that. So here's the funny thing is I go back to this Russell 2000. So this is actually a pretty well behaved and steady sort of chart. I mean, there's not a lot of craziness on here, but you can see, in the past, we've had a couple of little dips to this trend line, but this recent move has gotten it very extended from this trend line. And so it wouldn't be unreasonable to see it sort of, dip a little bit if the Russell 2000 were to pull work its way all the way back down to this trend line, depending on how much time went by, obviously, time's a factor because it's rising at a pretty good clip. And so if it traded sideways and pulled back a little bit and met it out in the future here in March, it wouldn't really be that much of a dip. But if for some reason, it spent the next, well, if in a short amount of time, say, a week or whatever, if it meets this trend line, then it's going to feel like a real sell-off. And so if you do the percentages, the move would be pretty big to come back down and meet this trend line in the near future. And so interesting sort of characteristic of the market. One of the things I'd be watching for is a break of these trend lines, right? Like on all the indexes, I've moved them around a little bit. I lowered this one, but you see a break of that trend line, look out because it seems like the sort of buying frenzy that we've seen in individual stocks on the way up can work the same on the way down. So anyway, so there you go. We're going to have at least one closed trade today with a real nice gain. And so, we got some respectable gains in these other ones. So we'll see how it goes, and we'll just see how it goes. There's hardly anything pending, and so that whenever there's a lot of open trades and nothing pending, that tells me that the market's made a pretty big move and that the potential for a little bit of a Sell-off is out there. So I will leave you with that. Thanks for tuning in. I will see you guys back here next week.